Bill here. Today is Wednesday, July 19th. Thank you for tuning in. Well, this is another week when all four metals are higher for the week. We have silver up for 2% for the week for the second week in a row. Gold's up 1% a week for the second week in a row. In fact, all four of the metals are higher for the week. And then for the 1 year, we have silver coming in at plus 35% from a year ago today. Gold is performing respectfully well, also up 16% from a year ago today. And so all the details are in the write-up, but that leads us into today's session, which is talking about why is gold, well, number one, is gold a good investment, and if so, why? And we've already iterated why I believe gold is a good investment. It's kind of a loaded question. If you look back thousands of years, even hundreds of years, even 50 years or 20 years, you know, the average, if we look at 20 years and 50 years, the average is right around 8%, a little over if you average those two periods together. But the last 10 years, it's averaged just over 4%. So what that tells us is just for gold to go back to its long-term average, we're going to have to see gold average around 12% a year for the next 10 years. Now looking back 1 year at 16%, that's already a good start on where gold needs to be to bring that average up. So just by the law of averages, not even accounting for all the things going on in the world that would tend to propel gold higher, not even counting stagflation, not counting the BRICS meeting coming up next week, not counting all the upheaval in the world, and we're on the brink of world war. We don't hope that happens, but it seems to be the direction things are going in. Even without all that, gold is due to have an average return of around 12% a year for the next 10 years, just to get back to average. But let's talk about a couple of other reasons today. There is a term you've probably heard of called shrinkflation. And shrinkflation is where they keep the price of an item the same, but they reduce the quantity. So for example, there's some Gain laundry detergent. It used to be 92 ounces. Now it's the same size bottle, but if you read the bottom, it says 88 ounces. Sara Lee blueberry bagels. You used to get 1 pound and 4 ounces of bagels in a package. Now you get a similar looking package and it says 1 pound, 0.7 ounces. We could go on and on. There are lots of different types of products. Green Giant frozen broccoli. Used to get a 10 ounce of that, and now you get the same price, same number of servings, but it's 8 ounces. So that's called shrinkflation, and that's where it's a type of hidden inflation where the price stays the same, but the quantity goes down. And that means you've got to buy more of them to get the same amount of product. There's another term called skimpflation. You may not have heard of that. That's where you have the same price and the same quantity, but the quality is lower. And you may have experienced this at restaurants lately. Reduced hours, the condiments are harder to find, maybe napkins aren't as available. Maybe they give you 1 or 2 and you pick up your order at the window, but there's no napkins sitting at the table, that kind of thing. You're paying the same or even a little more for the cheeseburger, but your experience is not as good. And the same thing happens in products. Skimpflation, one example, and there's several, but one example would be there's a Hungry Man chicken dinner, like a prepared TV type dinner, 15 ounces. Now, you could say, well, it's already shrinkflation down to 15. It used to be 16. Well, that's shrinkflation, but 15 ounces today is not the same as 15 ounces, say, 6 months ago, because now there's less chicken, maybe more gravy. They've put more filler in there to make it continue to be 15 ounces, but not as much protein. About 6 grams less protein for the same size package, same weight of package, same labeling on the package, but less nutrition in the package. So that's called skimpflation. Now what does that have to do with gold? Well, all these are hidden types of inflation that often are not accounted for by the official inflation rate. But owning gold helps protect you from this, because gold is a tangible item. It's a monetary metal and a tangible item. And looking back thousands of years, you could say that a fine suit of clothing, say hundreds of years, a very nice men's suit, an ounce of gold would produce that. And looking through history, that's still the case. Even though the dollar price of that suit, if you want a nice suit, the dollar price has gone up, an ounce of gold will still do that for you. And so even though the dollars change, if you want the same quantity, you have to fight through the shrinkflation, through the skimpflation. If you want to end up with the same amount and quality of product, you need something that's going to keep up with tangible items. And gold is a tangible item, and it helps you to do that over time. And another way to look at this is you may have heard or read that you want to hold some of your assets in gold and silver, because if you ever needed to leave, you would have something that was universal. It was in demand anywhere in the world. And while that's true, it may not be realistic for everyone. Not everyone has the opportunity to just pick up and move across the world. But the principle applies even if you don't move anywhere. Because like it or not, if you take a walk around your house, pull open your drawers and look around at all the things that you have bought through the years, what we'll find is that a large percentage of those items were produced or created somewhere else. And so we had to purchase them with dollars, and the dollars that we paid depended upon how willing they were to accept those dollars. And one of the things that happens with the BRICS nations as they get together and as they create a trading currency, and right now there's a waiting list of 30 or 40 other countries to join. We're talking about nearly half the population of the world. Well, once this happens, it may take a while for us to get our manufacturing back in the United States running full steam as it was maybe 30 or 40 years ago. It probably won't happen overnight. So consequently, even if you stay in the United States, it's likely that for another 10 or 15 years, a high percentage of what we purchase here in the United States might be made somewhere else. And so as the value of our dollar goes down against these other currencies, or other countries are less willing to accept dollars for their products, that means the price goes up in dollar terms. But as someone who holds gold, we have an asset that we can convert into whatever number of dollars it takes to purchase the same amount of items. So this is another good reason to own gold. Even if you don't ever plan or don't ever move somewhere else, if you're buying things made somewhere else and your local currency is depreciating against those foreign assets, it pays to own gold. Thanks a lot for tuning in. We'll have more information for you soon. Have a great rest of your week.